Stock market, Forex, currencies, or commodities. You all are thinking that why I'm saying all these words, because I'm saying all this because my today video is all about to cover all these topics related to the stock exchange market. Hello everyone, I'm Rabia and I'm gonna tell you all about stock market, or you can say that it's like a tutorial brief video for new traders. It's like a short course of international stock market for better understanding and to get to know what stock market exchange really is and how it works, what's its main features, what's main its terms and techniques to trade in stock market. And because a short but it's you can say that it's a short but complete info, especially for all new traders, and the detailed info of stock market to understand it before start trading. So just watch this video complete till end, and you will not feel any kind to go for any short courses for related to the stock market, and you get to know the briefly, and you will understand what's the stock market, especially for this video is related especially for the new traders. Now let's get started. And first, the basic important topic for trading are as follows. The main basic informations and basic topics are like you can also note down as well, and I'm gonna show it on my I'm also showing it on my screen. You can see the main important basic topics are like what's trading, what should be my capital investment. Number 3 would be like what's account opening procedure, which international broker I should work, why maximum backup is important, when I should buy any trade, when I should sell any trade, what's good time for trading, and in which currency I should trade most, which commodities is best option, which is risky trade, and can I trade in shares like SME, small and medium enterprises, or like Dow Jones, or like NIC, or AABL, like shares, big shares. Now topic number 13 would be like what my lot size should be. 14 is should I be day trader or monthly trader, long term trade or short term trade, why fixing target of profit is important, why chart researches and analysis is essential for trading, should I appoint fund manager for my trading account, and the important point number 19 is like what's demo account, why it's essential to work on demo before going into and jump into real account. And along with this, all these are brief random important topic and info for all the traders, especially for new traders, which I will elaborate after some time in this video. Now also I will tell you in this video the brief definitions of and brief definition of the terms, the specific terms of stock market. Now move to get to know the specific terms of stock market and its meaning, like bullish or bearish. These are the stock market just related to stock markets terms. These are related to stock market language, you can say, like bullish and bearish. What's technical charts, what's fundamental, what's take profit option, what's stop loss option, what's hedging option, what's break even strategy, RSI, Fibonacci, all these technicals, what is important, what's the difference between balance and equity, when should I withdraw my profit, what bips, what's leverage, what's spread. These all are the language of the stock market. The language of the stock market you also you should get to know about it, which I'm gonna discuss with you in this video in detail after giving you brief like keywords or like brief headings about what we are going to discuss in this video. So before you get bored of this video, I'm gonna start it our topics today. And starting with the first topics related to the basic topics, well, I will discuss about the terms and language of the stock market later. But first, the main important basic information regarding the stock market exchange is very much important. So let's start with our basic topics. Like question number one, I already told you that what's trading. Now you all know that trading is like its definition is like buy anything, like buy any currency or gold or silver at some rate and sell these trade when price go high. But in international stock market and in online trading, you have another option, another benefit, that you can also sell position without even buying, without before buying. Like when market is already it upside level, you sell that product, and when it prices go down and it goes low rate, then you will buy. So in physical market, physical trading, you have to only just buy. You have only buying option, like buy at least price and sell on high price. But in international stock market and online trading, you have both the options, like selling and buying. Whether if rate is low, you can buy. If rate is high, you can sell in advance and buy after the price goes down. So that is the first topic, what's trading, international online trading. This is the main and important, you can say, definition which I told you. The point number two is what should be my capital investment. This is very much important, and your all trades, your all accounts, your all each and every profit loss, all everything is depend on your capital. So what's the capital investment? What should be your capital investment? The capital investment would be like not that much of minimum, it should be maximum how much you can invest in stock market. Because you will not, if you invest, like for example, if you invest $10,000, it doesn't mean that you invest all the $10,000 in just one in trades. You will just giving token, like we are working in stock market on leverage basis. So you will just give your like 1%, or like you are giving the stock market 1%, and the stock market buy that position on your behalf, and you will just your remaining investment of like $9,900 are safe in your account. It's just a holding, it's just your capital backup, just to hold position if your position get against you, if the market volatile and sometime position your trade is having loss, and it's showing loss position. Then if you have a minimum investment, minimum balance, then if the rate goes sometimes my stock market volatile that much, that rate can go beyond your thinking, beyond your predictions. And so the minimum the mini accounts always hit, and they just vanish, like because they don't have any holding position because of minimum backup. So backup or capital is very much important, where you should have to understand this, that your backup or your capital investment is not investing in stock market, rather is just for your safety. And then your 90% investment just remains as like you save your money as in your bank account. They are safe, they are just for your safety of their holding positions. Okay, now point number three is which international broker I should work with, or what account opening procedure. Now first I'll tell you what's account opening procedure in online international stock market. It's very easy and very simple. You don't need anyone to guide you, you don't need anyone to hire for this and it's just simple. Like you can also you can work with in international stock market through broker house, or through you also can work with direct brokerage house or direct stock exchange. You can buy positions from direct stock exchanges, or you can also work with the affiliation and with the help of any brokerage house. Now if you doing individually and you want to do each and everything by yourself and don't want to work with brokerage house, then three main steps are like open brokerage brokerage house like stock exchange, brokerage platform website, and apply online. Account opening form is always there. You have to just contact through email, or like apply online. Their representative will definitely contact you, and they will guide you how to open your account. And after opening and applying online your online form, you will deposit funds. You will deposit your investment through any fund transfer option which they are offering you. And the third one is that after depositing the procedure, they will give you your login and password and platform, and you will install it in your mobile, or your system or laptop, and you will trade at anywhere at any time freely. Now the point is, which international broker I should work? This is very tricky question. Like, you have to work on it by yourself. Like these, if you write on Google the brokerage house of international stock market, you will find hundreds and more than hundreds and thousands brokerage houses existed in this world. So you have to work on it by yourself. Like, you should go for that brokerage house which have licensed through financial services of that specific country, like FSA regulated, and the regulatory bodies. You should work with them only. Okay. Now point number 4 is why maximum backup is important. Maximum backup, as I already told you, that maximum backup is very much important, because you have a holding position, because you have power to hold your position as long as you want, because market will definitely come back again. It will, like, you will see the charts of the market. It's like zigzag. It's like up and down. So market is moving according to the movement of the people, according to the thinking of the people. Like, if people all are buying, so market rates and the commodities and currencies rates are going upside. If people are going in selling trend and they are selling their currencies and commodities, then obviously selling became the reason of the selling position of currencies and commodities, and the market position is in bearish trend. So market will move up and down, and you will take your profit, good profit, with the great strategy and great profit target thinking. But with the maximum backup is very much important, because if you buy something and its rate is not going upside, rather its rate is going downside, and you are facing some loss, then you have backup. You have some kind of maximum backup to hold that position, because market will return definitely sooner or later. And then when that trade again giving you profit, then you will close it, or like you will take your profit. So maximum backup is very much important. The point number 5 is when I should buy any trade. Or already I told you buy your trade, but the most important point I'm gonna tell you, that if you see that the market trend is buying, and rates are going up and side, up and side, so most of the people think that it's buying trend and we should go for buy. No, it's not. It's buying trend is not for you right now, because it's already bought 50%, and after 50% it may be retraced back to 25%, and market go back in bearish trend. So it's not the position of buy position. You should buy any trade when the market is just started to going upside in 25 to 30%. You feel that trend of the market is buying and commodities rate is going up. When it already goes at very high level and very you see the candlestick is or green in a full length, or in a lengthy candle, then it's not a good time to buy, because already all the peoples of the world had bought that position, had bought that commodities. So definitely when they bought at least price, and so prices are going up because of lots of people are buying these commodities and currencies, then definitely they will sell at the high. When it reach at high level, they will sell it. they will sell their commodities and currencies and taking their profit. When they sell, the price of the gold will definitely come back again to the minimum level, to the bearish level. So when if you buy at the high level of buying level rate, then you will face loss, because that position or that commodities rate will go downside because of selling. So it's not buy only when you see that market is very much at selling trend, where you see the trend is selling and the rate is very much goes down, and then you will buy that position. Okay, now question number 6 is when I should sell any trade. Obviously, as I told, that you will buy when rate is very, that product rate is very much going in selling trend. When you see the trend of selling, you will buy that position. When you see the trend of anything is at buying position, you should sell it, because it will not go 100% buying position. It will definitely came back and definitely retrace to 25% or maybe 50%. So it's not the buying trend. Buying trend you will sell, and simply you can say that in buying trend you will sell at the high level, and in selling trend you will buy at the low level. Okay, so that's the another topic, and which I'll discuss in detail in my another video. Now point number 8 is what's good time for trading. This is very much important time, very much important topic, and very much important point, because the four main stock exchanges are in existed in the world. New York Stock Exchange opens first, and for in my preference I already want to work in New York Stock Exchange, and it opens at early in the morning, and you should wake up early in the morning when the stock exchange market just open. Because if you whatever you do, like you will see that market is just open, and you have whole day to trade in it. So you are very much like in flexible position, that if you whether you study or not, or whether you just trade blindly and you buy anything and the rate are not going upside and it will going downside, but you are relaxed and you have whole day, and market will definitely come back again to high level or again go to low level. Because in all days you can see the market, if you keenly observe, the market will definitely go 2 or 3 times at its high level and at its low level. So in between these high and low levels, 2-3 times movement, you will take your profit of your any trade. So the good time for trading is early in the morning at New York Stock Exchange. Now question number 9 is in which currencies I should trade most. It also depend. The answer is that it also depend on your on your backup, on your investment. Like if you have less backup, like 1,000 or 2,000, $3,000, then you will go only to that currencies which are very slow in moving average, and slow in moving like speed, like euro. It's very much calm. I am saying in this in my term that it's very calm currency. So you will go for if you have less minimum like investment, you will go for a euro. And if you have a good investment like more than 3,000, like $5,000, then you can trade on pound and AUD USD, because pound and AUD Australian dollar is a bit you can say fast currency, and it daily basis retrace, and daily basis moving average is $100 bips. So it's also as compared to commodities, it reflect the commodities reflection sometimes. So if you have good backup, then you will go for pound and Australian dollar, and if you have less backup, then you can trade in Japanese yen or euro. So next question is which commodities is best option. As far as I concern, I love to trade in gold. I'm gold lover, you can say. So for me, Commodities best option is like gold, silver. All silver sometimes got very much unpredictable, and it trap you. Like if it's like when it's moving, then it moves so fast, and if it's stable, then it's stable so long that you will get exhausted. And if you trade in that silver position, so you will just trap it in. So gold give you good profit in shorter time, in minimum time, but with a good strategy. Now next question is, which is risky trade? Risky trade is that like you have less you have minimum investment, and you trade with the much higher lot size. That is your risky trade. Next question is, what my loss size should be? Yeah, that is very much important question, which I am also discussing with you, that lot size matter a lot. Because if you have minimum account, you will have to work and trade with the minimum lot size, okay. But if you have a good investment, you can go with with good lot size. Lot size depends also on your investment, also on your backup, capital backup. So you should keep in mind that my lot size is according to my trade, according to my investment, according to my backup, okay. So the next question is, should I be day trader or monthly trader? It totally depends on the human psyche. It totally depends on the human needs, human wants, and human interest. Like I prefer to work daily basis. Like I fix my target. I fix monthly target that I have to earn $1,000 per month. So I fixed that. I divided it on 20 days average. Like Saturday, Sunday, as you know, market was closed, markets are also closed. So we have 20 days to work in trade, stock exchange, trading market. So I fix my target, daily basis target. When I avail that target, when I get that target, I just close the market. So I can say that I am a day trader, and I prefer to be day trader. The monthly trader are like you can say the big investor. The companies are mostly go for monthly trading, and they prefer monthly trading because they know the exact levels of they will trade not for just day trade. They are trading on the monthly basis chart, monthly charts, that and they just buy a specific lot size according to their investment and their backup, capital backup, and they just leave for whole month, and they know that that point will be definitely hit. So monthly trading is the best option for the companies, for the big investor and businessmen, while the mini investor or like starting of a new trader should go for day trading. And for those who have less backup or minimum like normal backup, normal investment, they also go for day trading and fix their target. Now long-term trade or short-term trade, which is better? The trade which gives you profit is better, whether it is long-term trade or short-term trade. But also all these type of questions are depend on your capital backup. If you have a good investment, if you have good backup in back at your end, back your seat, then you can go for long-term trade. Like you know that today your rate is one, for example, $100, and by moving slow and steadily, it will goes till $500 at the end of this month. So you just go for 5 trades with five lot size. You trade five trades of euro, and just fixed is take profit at $500, and it's your long-term trade, because you know that it will hit at the end of the month, and when the position of and when the market goes $500 level. So it is your long-term trade. Short-term trade is like daily basis trading and day trading or weekly trading, okay. Now next question is, why fixing target of profit is important? It's very important, especially for small investor, small, for the beginner, for the new trader, and for the small investor, that it's better to be to fix profit and take profit. And because you are getting you get you should know, and you have to understand this point, that you are getting something from the market, whether you are not losing from the market in the market. So you have to fix your target, daily basis target. Like I have to on daily basis $50 or like $10 in at like you can say that at the end in 20 days average you can calculate it will $200. If you on daily basis $10, then obviously 20 days profit would be $200, which is your per month profit $200, which is good. For just I'm giving example for small investors. Like you fix your target so that you will not get greedy, because greediness or kills the trader. That I'm saying this and I smile, like you can say my words, that greediness always and emotions kills the trader. Why and what are the reasons I will discuss in some other video. Now today for this movement and this topic, I am just saying that fixing target is very much important, especially for new trader, for the small investor. Now the next point is why chart researches and analysis is essential for trading. It's very much essential because you for blind trade. You can't go for like just open and whether you see is going by anything is going in buying position, you just buy it and you just sell. You will trapped in that kind of trade. So better to view chart, daily basis chart. If you are day trader, if you are monthly trader, then you should go for look at monthly or weekly charts, and researches that what's happening in the world, what's current issues, what's happening in the states, and analyzes all these techniques and use all these technical approaches, and then go for your trade. So the research, charts, and analysis is very much essential before doing any trade. Now other question is like people ask that should I appoint fund manager for my trading account, or should I do by myself? If you know the answer is that if you know how to trade and you know the trading risk factor, the CFDs, what's all these things, and what type of risk involved in trading, if you know and understand each and everything, then it's better that you trade by your own self. You trade and you operate your account by yourself, whether you give it to someone else. And because it's your money, it's your hard-earned money, you will feel very much you take care very good and of your investment rather than other. But in some conditions, like people get emotional because of their own investment, they get emotional, and so they are not trading well in their own account, rather they trading well on other accounts, on other people accounts. So that's another factor. But to hire a fund manager for your account is not a bad option if you don't know how to trade, what's trade risk factor. So but if you know trading, like I know trading, I know each and everything, I know technical, I know how to research what should be the best option. So I don't prefer to go for a fund manager, and rather I trade my own account, and without any brokerage house I directly involved in stock exchange market, in international market, and so I'm trading by my own self. So if you have confidence on yourself, then you should go for trade by yourself. And if you don't know anything, then don't take risks and don't get trapped in market. Rather to appoint, it's good to appoint a trustable fund manager. Now the question is, what's demo account? Demo account is like you can say it's practice account. Like if you are a new trader, if you are a learner and you want to invest in market, better that you should apply for demo account, and you will practice on it. After getting to know each and everything, how to trade, what's the risk factor, each and every, when to buy, when to sell, all these questions are clear in your mind, then go for real account. Now the last question, to point number 20, why it's essential to work on demo before opening real account. as I told before that demo account is very much important, because you learn a lot on your demo. And if you don't use demo, just jump on real account, you will you will do your real account like demo account, and you will lost all of your money. So better, it's essential to work on demo account. Practice first how to trade, what's the risk factor, because when you are practically doing something, you will learn more than just learning and verbally doing this. Practical thing is give you good experience. So practically work on demo account before you start your real account. All these are brief random important topics info for all the traders, especially new traders, which I'm just giving you, like you can say a short type of intro of stock market, and the instruction or like guidance for all the new traders to get to know and understand the stock market. And now move to get to know specific terms of stock market and its meaning, and all those important type of techniques and terms which stock market uses. That's our point number one. So the point number one is you get to know about the term of stock market, the most common and most using in words like bullish or bearish. Bullish means if my trades are going in profit, like in stock market is going in upside, it's called bullish trend. Okay, and if stock market is going in downside, we can call it as a bearish trend. And it is also resemble with the bull and the bear. Like a bull and bear is also the animals combination of bull and bear is also using in this stock exchange market as a term in which bullish shows the green candlestick, and which means that market is in buying position, is in going upside position. And a bearish candlestick is a bearish color. The red color is showing that the market is in under pressure, and the rate of all the commodities and currencies are going downside. It's decreasing, and it shows red color, and it compares as like bear. So oftenly you see the images of like bull and bear is like fighting with each other. It's related to the just these type of images are related just to relate with the stock exchange and forex exchange market. So point number two is what's technical charts. Technical charts are those charts which you can see in oftenly in trading platforms, which charts are showing on your screens, like and you can use different type of techniques and technicals which already feed in them in that platforms to you for the traders to use it and to understand that what would be the next level of any trade of any gold, silver, any currency. So technicals are work very much are very good and beneficial for the traders, especially for day trading, because technicals gives you the levels, or gives you a hint, you can say, or like gives you a prediction that whether market will go up or go downside. But now talking about what's fundamental are that type of newses which are reflect on the market. Like if market is going in upside and the stocks are going in upside, but prices are going good enough and good in going upside, but because of some kind of American and USA any intensity or any bad news came and spread in all over the world, it reflects and affects the stock market, and that is called the fundamentals techniques and fundamental newses which reflect the stock market. And because of that news, just of one news, or you can say if the president of USA says something about like their economies are not stable, and like their economies are their spending expenditure are most highly than they expected. So these kind of newses are we can call like fundamental, and these are the newses which reflects the stock market a lot, but for just for that day or just for a limited time period, because it's just a news and it's just a reflection of that news. But the market will definitely again come back again, to its previous level, previous trend, and follow its previous level and trend. And the fundamentals reflects only for some time and for some limited time. Now, what take profit option? What's the take profit option exactly? Take profit option is like when you buy anything, you fix and because the stock market and stock exchange is a 24-hour market. You can't stay and sit 24-hour in front of your screen, in front of your laptop or mobile. You can use you can't use mobile 24 hours. You have to sleep, you have to eat, you have to go out, and you have to work for yourself. So for in that kind of condition, when you are away from market and you are not seeing the market exactly, and your tradings are in holding positions, and you're waiting for the profit level, so you have to fix that expected take profit level, and that price of that commodities or currency that you expected, that if this currency will go upside till $100, you can say. So I have to like fix my profit, take profit option at $100, because when market go $100 level, it will hit, and my take profit will be added in my balance, in my account. So whether you are in front of market or not, the profit will be added in your account, and you need not to open and log in at anywhere at any time just to take your profit, because you already fixed the take profit option, and it is beneficial if you are not in front of the screen and the platform, and if you are away from the platform or screen. Now, telling about what's the stop loss option is same like the take profit option, but the benefit, is it beneficial or not? I already told in my previous video that I don't recommend stop loss, because it is made only just to hit it. Because when you are away from market, you don't know that really or exactly the market goes at that level that my stop loss had hit it. Why? Even that I don't think so that market will go that level of that it hit my stop loss, but because according to my personal experience, stop loss always hit. Rather take profit hits sometime and sometime not. It's just few times take profit hit, but stop loss will definitely hit. Stop loss means that if you same like take profit options definition, that if you are not in front of market and you fix your take profit, that if market go upside, then the market close my position and take profit and fix and add it in my account. But if market go volatile and against my trade, against my expectation, and I will face loss, and it could be more than $100, and I couldn't bear that loss. So it's better that I should fix my stop loss, that if market goes $100 downside, and the $100 loss showing in my position, pending position, then market will close my position, take the loss of this trade, and minus this loss from my current account, and I will bear that loss because I had fixed stop loss option. But I'm safe that market, if market that they go $500 downside, then if I didn't fix my stop loss option, then I will be facing $500, which is unbearable for me. So it's better to bear $100 loss, so I should have to go for stop loss option. That is stop loss option. Now, talking about what's hedge option, which is sometime I avail and sometime it's like 50-50. For me, hedge option is beneficial for me in a 50-50 condition. Like if in very rare days, or in very rare time, when position and the holding position and the trade goes against me, then I use the hedge option rather than to fix stop loss. Because hedge is like if you buy something and it prices go down, and it will further go on downside, and you heard the news about that it will not be stable and not get back approximately 3-4 days or a week at a buying trend, and your buying position is having a loss, lots of loss. So, and you don't even have that much of capital backup to hold that position on, and you will face, like you are facing now $100 loss, it will gonna downside till $500 loss. So it's better to I should wait for till $200 loss, and then I hedge it. Like if I buy, my buying position is having $200 loss, I will again also sell that trade. Like if I buy euro and it go against me, and it's showing $200 loss, I also then sell euro, same euro, not other currency, not or other commodities. As I sell euro at 200 level, and then if market go up and down, I will not be so much that much concerned, because my positions are like it hedge, it like fixed, because if buying is showing loss, then selling is showing profit. So it is like equal, and it will like I can take it at both. Like $200 loss is already fixed, but it's in holding position, it's not like stop loss, it's not minimized or deducted from my account. Rather it is in waiting position, it's in holding position. And I prefer to do well when sell position is go so much downside, and I feel that market will return again, so I take profit of that sell position and add it on my account, and then I again start waiting for buying position. And if buying position go a not 100% at that level which I bought, rather it go only 50%, then I will close that position also and take loss of that buy position. And when I realize and calculate that if I earn $400, like $400 in my sell position, and I close my buying position, then market go 50% upside again, and at that level which where the $200 loss I was seeing, so I take that $200 loss and close also that position, because the market can again go again retrace and retracement and again sell. So it's better to close it. And if I calculate that I earn $400 and I minimize 200 loss so in that position I'm also again in a profitable position, like I earn $200. Still even I got trapped in market and my position go against me. So hedge is not my option, rather hedge is my option, rather stop loss is not my option, which I prefer. So in briefly I'm discussing all these things with you. I hope you understand. Now next position is like what's break even is same like strategy. I already told you that gain 100 gain profit, and then other market again go upside, close other position in break even. Like if you can also say that if I like same example of the previous example we will take it, that if I face $200 loss, I sell that position, that currency all again, like euro, I again sell euro, and I am having $100 loss, but in market return again, retrace again in buying position, and it will come again like 50-50 time, like 50-50, like the selling position having $100 loss, and the 100 profit, sorry, sell position is having $100 profit, and the buying position having $100 loss. So I take $100 profit and close that position of sell, and I'm waiting for the market go upside, and the buying position also shows that when market go buy again, then 200 loss would be definitely decrease. So when $200 comes at that point of $100 loss, I also close that position. So it's like break even. $100 loss and $100 profit is equal to 0, which is. Now talking about point number 8, and that is the charts technicals, which are mostly which I use mostly is RSI and Fibonacci. These are very much helpful for me, and I recommend to use only these tools, because relative strength line like index, RSI, give us the view that market has or something like a gold or silver is down till 25% or 50% or 75%, and is it going downside, or is it its line is in bearish trend, or is like, or maybe its line is like a bullish trend. So you can view and you can idealize that the market may be in the bullish trend, so I should buy, and it will buy buying position because of RSI is showing. Fibonacci is also something similar like RSI, but it gives you more technically and techniques, and it's showing like if we break 50%, then it will go for 25% inverse. The reason because all these charts are very important before trading, to view any and each and everything carefully before you trade in currency and commodities. So these are the technicals we call in stock market exchange is it terms as a technicals, and technical charts helpful very much for traders. Now talking about what's difference between the balance and the inquiry, the total balance and the inquiry, that is the main point which maybe some new trader don't know. And what is the difference between balance and equity? It's like you are your some positions are in holding position and which you are facing loss. To balance, so balance is your like your total amount which is you already had like your investment, what how many profit you earned last days, all your total account balance is your balance. And what is equity? Equity is like that if your some trades are moving in position in holding position and they are having loss, so equity tells you that exactly what exact balance you have truly in sense. Like if you take all these losses, you will the money remains the money will left total money which left is like showing in equity. So equity is that if you are holding some positions, equity will tell you that if you take any kind of loss or profit, then exact your after deducting your loss, exact balance what you will have in your account was your equity. Now, term number 10 is when should withdraw my profit? That's a major question also. Then I prefer that I always prefer to withdraw a monthly basis profit. So it will be very good opportunity and good like strategy that you think that you are doing a job, and so you withdraw your monthly profit. Some traders use they want to withdraw their profit on weekly basis, or some with like daily basis, but I prefer that you should go for withdraw after month. So monthly withdraw would be very very much better than, because you are giving so much time to the trading market, and so you have some trader can't even do another job because of trading. So they should know that I will withdraw my all profit after the end of month, and so they are struggling and keep trading all the month, and whatever left as after remaining its investment, that was their profit, so they should withdraw it. Now point number 11, and the term is bips. What's bips? Bips is like you can say if $100 gold is moving 1700, and when it move in 1701, then it means the one moving number of one is bips, and like gold one number and one bip, we can say in the technical market of the term of the stock exchange, that bips, in one bip of gold we gain $10. One bip value of gold is $10, and also some currencies value also now, like pound also have one bip value is $10. So bip is the like bip will say that in 1 point what how much dollar you are earning just when 1 point raise. Now talking about leverage, what's leverage and what's leverage and what's spread. Now first talking about what's leverage. Leverage is like What like if you see that you invest $10,000, it and you buy lots of lots and lots of lot sizes, and you buy gold and silver and currencies and with heavy quantity of lots. So but your backup or your balance is not affected by because of all these buying. And you are, if you buy at that position, because leverage like international market or your specific New York Stock Exchange or your broker are giving you leverage that you pay only 1% or 10%, and we will give you on behalf of you, we will give your trading rest amount of buying or buying of any trade with any lot size. Because if you leverage, you don't have availed the option of leverage, then your all investment will be goes, and your balance will not remain. So leverage is like just like a token money that you are giving just token, and you are booking your trade, and the other rest amount is giving by the broker, and broker is giving you this type of leverage. Now what's spread? Spread is like if you see that bid and ask, the positions of like buy or sell, and the two bid and ask, in between bid and ask, you see some difference. Like if in gold, bid position is like 1700, ask position is 17.2, then that may in between these two bips are like we call it spread. And what is spread, and why it is showing, why not 1700 is in both the sides like ask and bid, why it's not showing? Because these spread is the main commission, you can say, is the commission of your broker, which it's his like profit, because of he is giving you services of platform of brokerage house. So his spread is per trade he's charging the spread amount. You can see that some broker spread amount is also depend on the brokerage. Some broker like give you high amount of spread. Like if you gold is showing 1700 in bid position, ask position, gold price would be 1710 position 10, like it mean the spread is $10 between 10 numbers and $10. So this is the very huge amount of spread which the broker is charge from you. So spread is like negotiable. You can negotiate with your broker that I don't want to work with this high amount spread. I want some kind of like favor if, in spread. So I want to just I can just give you $2 2 bip spread. So 2 pip spread is a very good option, because if you buy at 1700 certain, when market goes 1710, then after deducting the spread of when market goes 1712, then $2 difference is the spread of your broker, and $10 has been added in your account. So it's example, it's just an example. But if your spread is like $10, and or some nowadays brokerage houses gives a lot of heavy amount of spread, like in gold position, especially in commodities, gold, oil and silver, they are offering like 30 bips spread, which is and 20 bips spread. So it means that if market you buy at gold at 1700, but gold will go 1700 1720, then your profit is not, you are not gaining any profit, even though 20 bips gold price has been risen. So because it's first it's the spread, 20 bips are using in for spread, and it's the brokerage commission. After 1720, whatever price go high like 1715, then 13 bips profit would be added in your account. But rest is very much waiting position, you can say. But if your spread is less, your gaining and your profit range is much higher. So spread is very much important. You should negotiate with your broker. And now To conclude, before you get bored of this my video, but I think it's a tutorial and it's very informative and helpful for those traders who are really just started with the stock exchange, and they are just starting their business and investing in stock exchange money. So to conclude, I would say that trading topic is so vast and lengthy, and it takes time to understand it properly. And so definitely maybe I missed any topic on any term, or I can't even you can't even get to know, especially new traders, what I'm saying, why what terms are I am using. So these are the brief history, brief short course for the new traders especially, and for the those traders working on it or working with the fund managers. You should have to learn by yourself also. And a brief intro of stock exchange, this video is gonna be very helpful for new traders especially, and those who working with the fund managers. At last, I would like to advise you that whether your trading account is handling by any fund manager, but you should also get to know basics of stock market and learn how you are gaining profit and how your fund manager is arranging profit for you, and also commission or like spread of brokerage. So it's very important that you should also know. And if you want to get if you want to get to know in detail about any topic, about any term which I had described in this video, you can also see my other videos related to every single topic individually in detail. So that's for all now. I hope that you would like this tutorial video and a short course of you can say a short course of stock exchange. So if you like my effort to teach you short course of stock market, then please like and subscribe my channel for my motivation and appreciation, and also for your guidance in future. Rather, in short, I am giving you the rough headlines or like headings of trading, that how you can start your trading. Let's get started. Keep in mind 5 points which you should know before trading, before starting investment in trading, or before starting trading. That the number one point which is very important is that education. You should educate yourself what is trading, what stock market, what's leverage, what's each and everything. You should know whenever you start any business, you know each and every up and downs of it. So you have to learn and educate yourself of stock exchange market before starting investment in stock market. Now second point is create a trading plan, and that whatever market will go up and down, I will not concern with that. I will definitely just take my profit of daily basis, like $20 I will earn daily $20, which will give me monthly like a good range of good ratio of profit. Like if you earn $20 daily, then monthly you will like earn 20 days market is like $400 in your bank, in your account, in your balance. So create a trading plan and then invest in stock exchange market. Third point is shortly and importantly, choose a broker, a trustable broker, and work with that, and negotiate with him each and every up and downs, and get to know each and everything from your broker. 4 point is make a trading journal psychology, and work or trading journal, that was how trading is moving on, what's the history, what's currency, each and everything. Now fifth point is work on your psychology. It's very much important. Don't be greedy, because market is very much attractive. It's when you gain profit, you want to trade again, you again jump in the market without thinking anything. After gaining your daily basis profit or targeted profit, you should quit the market, you should close the trading platform, and you just move on from the screen. Because if you get greedy that I can earn again from market, sometimes you get trapped, and your position will hang on, and it will can go holding position with the showing loss. So better to approach just your trading plan, and better to do just like whatever targeted profit you want to gain, just gain it and close the market, and don't be greedy. So that's the short, very again short you can say short and brief important points which you should know at the end of this video, before you should know at the end of this video, before investment in stocks in market. So I think this video will be very much helpful for the new traders and for the existing trader but who don't know that much about stock exchange market. So please comment and comment me that whatever you see, like any lack of education or any point you want to say to me, to increase and to do best in my next video. I don't want to I don't want to be do which you don't love, because you people are, I'm giving this all this because of you people. So like, keep liking, keep subscribing, and keep motivating me for making videos, informative videos about stock exchange. Thank you so much.